Hey everybody, Rob Maurer here, and today we are talking about a new price target on Tesla stock from JP Morgan, some news on Tesla's solar offerings, as well as an update to autopilot functionality. I am recording before close today, but it looks like Tesla will probably finish the day and the week right around $1,000 per share. Figured since it's Friday, we can start with the most humorous, at least to me, news of the day, and that is a new price target from JP Morgan Chase, analyst Ryan Brinkman on Tesla stock. Brinkman historically has been bearish on Tesla. He had the lowest price target on the stock of the analysts that I was able to track after Tesla's Q1 earnings report at $240 per share. He was one of the few analysts to not increase his price target after that report. Well, today he has finally decided to increase that price target from $240 per share all the way up to $275. This new price target would be 72% below where Tesla trades today and would imply a $50 billion market cap. I expect Tesla's revenue in 2020 to exceed $30 billion, so this would imply a roughly 1.5x price-to-sales ratio, which would only be about double the price-to-sales ratio of Toyota, for example, which trades at about 0.66x price-to-sales, which doesn't make a lot of sense when you compare the growth rates and profitability potential of the two companies. To be fair, most of the other automakers are generally valued at a 0.1 to 0.4x price-to-sales ratio, so Tesla would be quite a bit higher than that, even in this bearish scenario. But on the other end, you have a company like Amazon, which I personally like a lot as a comparison for Tesla. They currently trade at 4.5 times sales. And that's obviously at a different point in time in history where they have completed a lot of the growth that Tesla still has to gain. Right now, Tesla's trading at about 6 times sales if we assume more than $30 billion in revenue this year. So despite the small price target increase, JP Morgan is still very bearish on the company, saying, quote, "We see Tesla as by far the most overvalued stock in our coverage group, apart from Hertz, which we also rate underweight, and for which we previously withdrew our price target prior to its bankruptcy." End quote. I don't have access to this note. If anyone does, I would love if they could send it over because I'd love to see what Brinkman is projecting in terms of the future outlook for Tesla. That's always very interesting. But we do have some more information coming from Seeking Alpha. They say, quote, "Brinkman acknowledges that both technology and execution risk seem substantially less than was once feared for Tesla, but says expansion into higher volume segments with lower price points seems fraught with greater risk relative to demand, execution, and competition. Valuation appears to be pricing an upside related to expansion into mass market segments, well beyond our volume forecast for the Model 3, he notes." End quote. All right, fair enough. I mean, concerns around demand and execution, I guess you could make arguments around those, but competition, bringing that up, is a little played out. Nobody can even compete with Tesla in the higher price bands, so how can they expect to compete in the lower price bands where it's more difficult with higher volume and thinner margins? I mean, I guess if you're referring to just the internal combustion engine competition, maybe a fair enough point, but only if you want to ignore the obvious advancements in electric vehicle technology. Anyway, despite the analyst arm being bearish on the stock, there's supposed to be a walled garden between this and the banking arm, but JP Morgan did invest heavily in Tesla in Q4, according to Bloomberg, increasing their position by about 6x to 2.5 million shares to end 2019, meaning they've made probably $1 to $2 billion in Tesla stock over the last 9 months or so. Next up today, we have a pretty significant update on Tesla's solar offering, not on the solar roof, but on the solar panels. Tesla has lowered the price by roughly 20 to 25%, and they've increased the efficiency of the panels by about 10% as well, meaning the cost per watt of Tesla's solar panels has come down by about 25 to 30%. On their site, Tesla lists 4 size systems, small to extra large, between 4.1 kilowatts and 16.3 kilowatts, with prices before incentives ranging from $10,000 to $30,000 or $2.45 per watt on the small end to $1.84 per watt on the largest size. That's before incentives, so there is a 26% federal tax credit that brings those prices down for each system. Now, the solar market pricing is a little bit more convoluted than something like the automotive market, for example. Things are a bit more varied due to the installation, but I found a website, EnergySage.com, that has compiled pricing for different systems for a bunch of different manufacturers, and they give a price range for each of these manufacturers for 6 kilowatt systems and 10 kilowatt systems. Taking the lowest price in those ranges for each of these manufacturers, it looks like the dollar per watt ranges from $2.27 on the low end to about $3.14 on the high end. And those are all before incentives, so again, compared to Tesla was at $2.45 per watt to $1.84 per watt. Now, this data from Energy Sage was compiled in January of 2020, so prices could have come down since then. And despite giving a range, they do say that this is the average cost of these systems, so there may be cases for individuals that have gotten lower prices than this. Either way, it looks like this new pricing from Tesla should be extremely competitive, but if anybody has better data on the competitive pricing of solar, please let me know. Next up is some news on Tesla's full self-driving feature set. Early access program members have reportedly received emails letting them know that the version of software being pushed to their vehicles right now will no longer require driver confirmation to continue through green lights when there is a lead vehicle ahead of them and also not in a turn lane. So again, this is only early access program members at this point in time. Elon did confirm this on Twitter. I think it was first shared by Live and Die on Mars on Twitter. But another nice little update to the feature set. Of course, right now, how the functionality works is that regardless of the color of the light, the vehicle will automatically come to a stop unless the driver confirms that it's green and it can carry through. So now for early access program vehicles, that confirmation is no longer required only if there is a lead vehicle, and if there is that lead vehicle, Tesla says the stop line on the driving visualization will now turn green to indicate the car will continue through an intersection. I would guess this feature makes its way through the early access program pretty quickly. Obviously, Teslas have been aware of lead vehicles for quite a long time, so this seems more like an interweaving of two already available public features, so I'm guessing the reliability will already be extremely high. Last quick thing for today, BMW has announced that they will be cutting about 6,000 jobs and also be putting their partnership with Daimler on hold for developing self-driving technology. The company said in a joint statement that they are, quote, putting their cooperation on development of next-generation technology for automated driving temporarily on hold. Following extensive review, the two companies have arrived at a mutual and amicable agreement to concentrate on their existing development paths, which may also include working with current or new partners, end quote. BMW's head of development, Klaus Froelich, who has given us many interesting quotes that we have discussed at length in the past, said, quote, our current technology generation offers very strong, sustainable potential. With extremely powerful sensors and computing power, our robust modular system puts us in an excellent position to offer our customers what they need for many years, end quote. BMW, always all about that modularity. Anyway, these are the impacts I talked about a few months ago from the macro situation. Tesla's competitors are going to delay anything that could be seen as an excess expenditure or a long-term project, just so they can make it through the short-term period as profitably as possible. That means focusing on their core business, but that's not going to pay off in the long term. Tesla, on the other hand, their core business is the electric vehicle, is autonomy. Their focus is there regardless of the external factors. That'll wrap it up for today, though. Happy Juneteenth, everybody. Hope you all have a great weekend. Don't forget to subscribe. Make sure you're following me on Twitter at Tesla Podcast. And I'll see you on Monday for the June 22nd episode of Tesla Daily. Thank you.